So welcome guys, what's good? Hope y'all doing calm. It's been a long time here on this channel. Yeah. So I'm fully back right now. We'll be dropping steady videos. Right now. And, yeah, I got y'all back to back steady vids. So I've been getting some comments lately on our private group. And they want me to make some videos. On a specific topic in the financial market. So I've been getting the likes of please can you make a video on fair value gap, how to identify them, and other blogs identify, and the likes. And also some of them have been asking me, the newbies in the financial market, they really don't know how to place trades, yeah, from their MT5 to modify the trades. They really don't know how to modify the trades and all sorts. So in the subsequent videos that will be coming up, I'm going to be explaining all this for you guys, and I hope y'all, enjoy it and have a depth understanding to what I'm going to be explaining to you guys. So stay safe and stay blessed, and I catch you on the other side. You're welcome, guys. So we're back to the chart. So like I said, the comments here are made on the structural breaks and market directions, specifically on charts patterns, and also fair value gaps and other blocks, but we'll more of work with chart patterns. You get. So straight off, I'll be showing you what this chart is saying. We are on the XAUSD, which is gold, and we're on the 15-minute time frame. Yeah, so I basically taught you guys about the top-down analysis when you want to take your trades from daily 4 hour down to 2 hour, 1 hour, 30 minutes, and taking your trades confirmation and entry on 15 minutes. But we've done general bias, and we've been bearish, obviously. So a little bit of retracement to the bulls side, but we are still basically bearish on XAUSD. So moving straight into today's teaching is showing you what the market is really saying and how to take your trade. Yeah. So what is this chart saying? If you can see this chart XAUSD, we are basically let me show you from this place. You could see that the market has literally been consolidating. You understand? So the market has been consolidating up, down, up, down, up, down. Doesn't have any clear move. So this market has been consolidating. That's why we did not take any trade around this aspect. You understand? So we just waited for confirmation for a breakout. You understand? And that breakout happens to be the sell that dropped off from this place. So that breakout gave us a break of structure from this side, gave us a break of structure to the downside. So we still got another break of structure to the downside. You get me? So we got a break of structure to the downside, and also we got another break of structure. This B could not break of structure. Then moving downward, another break of structure to the downside, obviously a little bit of retracement downward, then another break of structure. Like I said, the B could not break of structure, so we are basically breaking structure to the downside, which is the bearish side. So we got another break of structure, retracement. And what did this retracement give us? So there are some things you need to see in chart patterns. When you are trading chart patterns, there are things you need to see. So right now, I just spotted something from here. This chart patterns gave me a double top. If you can look at it, this is a double top. So let's identify it from here to this place. That's a double top. You can see it gave me double top. So if I want to go in for myself, I will have to, go for a short and take myself after this first bearish, second bearish, then this long candle here. After this long candle, that should give me confirmation to go down. That should give me confirmation to go short, this long candle. Then I'm going to be taking my trade from here, short. Then what are we going to be chasing? So we're trying to refine our stop loss. We're going to refine our stop loss just to 10 pips stop. Then what, 10 pips to what, let's say to 20. You understand? So right now it's even to 44. Let's say we are taking 10 pips to 37. So this is like 1 to 3 our risk reward. So trading, chart patterns, you need to look at every retracement of the market. So this retracement, came up, retracement, then went back to respect this double top, and at this we got a sell. So that's your confirmation for entry. You would have gotten here and made easy money from this double top pattern. You would have made easy money from this double top pattern. So for you to have your confirmation, you need a strong bearish candle if you are on the bearish side to move in for short. So we literally didn't go for short around this place. We waited for this strong bearish candle, and the retracement gave us strong move here, went back but still didn't hit our stop and drastically go down. So after that displacement, after the displacement of the we drew a structural break, you understand, then that's all obviously. Then we got a change of character. So this C connotes a change of character from this place to this place. That's a change of character. And after a change of character, a break of structure, a structural break obviously, then another structural break. So what did I just say about chart patterns? You understand? We got a double bottom here, if you can see a double bottom, and the double bottom what gave us this amazing displacement. So if you were to go on this trade after this bullish candle, some people want to wait for their confirmation, and it's fine. Like I said, wait for confirmation. So your confirmation should be after that bullish candle. You should wait, and you should be taking something real good, realistic. So what are we what's our stop loss here? Risk reward, we are risking just 8 to target what? 8 to target 16. 8 to target 16 obviously, or 8 to target 20. Let's go for 8 to target 25. So if you go for this, like 1 to 3 risk reward. So after this confirmation of the bullish candle, put your risk reward 2, then you can target something real good, then you go for it. So this is another amazing double bottom, which is also called the W pattern. If you should use your 2 here, you can look at it. This is also called a W pattern because it displayed an amazing, look at it, W. So if you are to even bring it out, you are going to see that yes, this is a nice W pattern. You understand? So after that, we took profit here amazingly, and we got a break of structure up here also. So this was the last break of structure here. Then a change of character below, change of character. Then now we are now still on the bearish side, which is break of structure, coming down, displacing amazingly. then coming down again, another break of structure, another break of structure. After this last break of structure, we got what do we get here? Change of character, a change of character. But others can still go in again for a long. Yeah, others could still go in for a long, which we could get a tool here and make this as a double bottom, get a confirmation here as a double bottom. Understand? A double bottom, like I said, you need a confirmation to go in for a long, but we really didn't have an amazing confirmation unless you just want to risk this trade, but you can see if you should go for a long this place, because it gave a crazy displacement of a bearish candle, which you shouldn't go for a long at this point, you understand, unless you feel like you want to risk this trade, you understand, then you are going to go for a long at this place. You just want to go for your long and take in whatever you feel like, then what you need to know what you're risking. Let's say we're risking 19 or 20, 19 or 20 to take how many, let's take 40, 40. This trade would have still be an amazing take profit because of the double bottom. Mind you, your double bottom won't work for you at every point in time, you understand, so you just have to know your confirmations. For this, we really didn't get an amazing confirmation to go in for a long, but we could take that trade off the risk of losing or or winning the trade, you understand. But amazingly, this was a winning trade, you understand. So we got a change of character, obviously, from this place. A change of character. So after the change of character that happened here, then we now start moving in for structural breaks again, break of structure, then after this break of structure, really nothing to break up there. Then we get change of character, change of character, then breaking these structural breaks here, another structural break here, another structural break here, you understand. Then moving down, another structural break here, after this structural break, another one should go down. After that structural break, we've got nothing below, then we go for a change of character. A change of character should start from here. That should change a character for bulls, for bullish entry, obviously. So after this change of character, we really didn't get another break of structure up there. Then we got another change of character, obviously, below. Then structural breaks again, structural break again to this side, then moving down. You could also call this zone a consolidation area, but it's obviously going down. Basically, it's obviously going down, but for you to be on the safer side, so this was long gap base of market opening. This gap base of market opening, it gave this long gap here, but it continued moving. So why do we take a sell here? I want to tell you why we took a sell here. So we took a sell here off this zone, so it tapped in 3 times this resistance zone, 1 2 3. It tapped in 3 times, and the third time gave us an amazing displacement of here. This should really go down. So it tapped in 1 2 3, and we got our confirmation of this this bearish candle. We got a confirmation of this bearish candle. And also, if you need a clear confirmation to enter this trade, you would have waited a little bit. And like I said, you need strong confirmation for taking your trades. You would have waited a little bit to wait for first, second bearish candle. Then you know that, okay, I'm going in massively. And what would you be risking on this trade? You'll be risking just 12 or 15, but max what I advise people to risk is 15 to 20 pip stop, highest 25, depending on what you feel like risking. And you'll be gaining 27. That's 1 to 2. Amazing risk to reward ratio, you understand? Then after that, structural breaks to the downside, obviously. And what do we do after this structural break to this downside? After this little structural break to this downside, what did the market do? The market did something. So the market would be this other block. So this is another block. Market came down, broke structure. Before breaking this structure, you respected this and displaced something amazingly. You understand? Displaced something amazingly. So what do we even risk here? This is just like 7 pips to make 35. This is crazy. This is crazy. Yeah. So you can see crazy. Yeah. So it displaced something amazing. Then all these structural breaks to the downside, break of structure, break of structure, and also break of structure. So I told you generally we are bearish on gold, then break of structure, you feel me? So why are we still going for a buy here? Remember, I told you mostly when you trade chart patterns, you need to make your eye see beyond what others are seeing. I don't know, but like you just have to do so. You see this double top this week and this candle right here. We drew a horizontal line. If you can see, it is also a W pattern. If you can see it, this gave us an amazing W pattern. It doesn't have to be exactly very clean. You just have to see beyond what you can see. So it gave us a clean W pattern, you understand? So a clean one though, and that was an opportunity for going for a long, you can see. So we went in for a long here after this market. So we went in for a long, you understand, and we made this amazing. What do we risk also here? We risk let's check what we risk. We risk 20 pips, like I just said, 15 to 20 to make 48, 1 to 2 amazingly. If we had want to take here, we would have taken like let's say 78, 70 to 80. We made amazing profit of there. So after this last break of structure, we got change of character. After this change of character, this is an fair value gap. So we took this trade off a fair value gap. You understand? So this is the fair value gap. The gap in here is the fair value gap. You understand? So the gap in here, that's the fair value gap. Yeah. So we got our fair value gap here. So the market came back, tapped in our fair value gap, and this is a long. The market tapped in our fair value gap, and you could see we made something real cool. Let's say 15 pips stop loss. Then to take 30, if we were to take 15 to take 30, we would have made something amazing. Let's say 35. Understand? So we really made something amazing because it tapped in our fair value gap. So you could also take a trade off fair value gap. You understand? It tapped in. I need a confirmation. We got our confirmation of this engulfing candle. You understand? This bullish engulfing candle, and came back, respected again, but luckily it didn't hit our stop, and we went in for a buy. You understand? So while we go, we have another fair value gap here. We drew our fair value gap again, respected the fair value gap, and displaced another amazing take profit here. Then after that, so that's that about fair value gap. If you should still go down, you could see we made amazing structural breaks, break of structures. The market, you just need to understand that the market respects key structures. You just need to understand that the market respects key structures. You understand? So we have we have this consolidation area where you would have stayed out of the market. So there are some places you need to stay out of the market. You understand? So off this place, you can see we also have a double bottom of this place. You don't really just need to look for a chart and want to go in. You need confirmation. Why would have gone in here is because of this confirmation of this bullish candle. You understand? This engulfing candle would have gone in and made amazing profit off this place. You understand? So double bottom also gave us something amazing there. You understand? Something real cool. So that's about that. And so also we have what we call head and shoulder. These are another chart patterns for head and shoulder. If you can see, this is the head. This is the head. Let me show you. So from this place, this is the head, and this is the shoulders. This is the shoulder. So this is what we call the head and shoulder pattern. Understand? So it came here from this place, came to this place, down, made the head, came back, respected to the shoulder, and went down. So for this head and shoulder pattern, you should be looking for a sell at this place, and amazingly you should get a nice risk reward in this trade. You understand? A nice risk reward. So we are losing 15 to get 30. We lose 15 to get 30, and this would have been an amazing take profit because of head and shoulder pattern. You understand? So this is a head and shoulder pattern. Head and shoulder, you go for a sell. So you can turn that inversely. If you see a inverse head and shoulder, you should go for a buy. So this is head, shoulders, then you go for your sell. So that's about this video. I'm going to see you on the next video, and I hope you put all this to practice. Watch it again, and put them to practice, and you are going to get it real soon. You get it amazingly, and this is what we've been using to make a lot of money in the financial market. Stay blessed and stay safe. See you. So I hope you guys enjoyed the video, and I hope you got full and depth understanding to what you have just watched. So I would love you all to like, share, subscribe, and drop a comment for the next video you want me to make, and I am going to make such video for you guys, and I just want y'all to understand, because you are also my priority. Okay, so Please, let's keep supporting the Thrive FX empire by pressing the subscribe button, and see y'all at the top.